Welcome back to another video. So today I've got a video in a kind of new style. I'm going to be doing a top-down analysis of Bitcoin and giving a brief economic outlook, because in my group chat a lot of people have been asking, what's next for Bitcoin, what levels are coming next, what can we expect. So essentially this is the way that I'd be able to give you guys my opinion. So I've decided to make a video to show you each step of exactly what I do before, I claim that this level's next or this level's next. So let's get into it. The first thing, top-down analysis, what does that mean? All that means is essentially starting on your higher time frames and coming to your lower time frames. If you've been studying, technical analysis, everyone will always tell you your levels or your points of interest, your ordered blocks, liquidity, imbalances, whatever. They are more important on your higher time frames. You have to pay attention to your higher time frames and then come into your lower time frames. So essentially, top-down analysis, starting from all the big time frames, your monthly, weekly, daily, then after you should be getting into your lower time frames to actually start trading. But let's get into the chart so we can actually see how to apply all of this. Okay, so this is the Bitcoin monthly chart. I'd start, of course it's a monthly chart. I'll start by marking out, well, this is the first thing that stood out to me personally. It doesn't have to be exact, but this is trendline liquidity. You can mark this out. You'll see on a lot of people's charts with something like this. Right? That's trendline liquidity. There's liquidity residing below this low. And there's no specific points of interest that jump out at me. There's no, massive, there's no specific order blocks that jump out at me. I do see a couple imbalances I'm going to mark out now. So this is the most obvious one, right? And again, I've made a video on this and I'll explain, but a lot of the time, what I would see is somebody draw an imbalance and they'll draw it like this, right? They'll use this candle because this candle came in. That's an incorrect way to draw your imbalances. Your imbalance needs to be drawn from where it started or where it was initially created, right? And then of course this wick breached this imbalance, right? So another thing I like to do, not everyone does this, but me personally, I'll just grab my fibs and I'll pull it out onto the imbalance and I'll mark the midpoint. Again, this was mentioned in my video on imbalances, which everyone should watch. Hit the wrong line. But I mentioned that if price fills the midpoint of an imbalance, then it can be considered mitigated. So this is a concept called consequent encroachment. It's from ICT, Inner Circle Trader. Spoke about him in my last video as well, but a very good trader. Everyone should check him out. That's the first imbalance that I see. Then below us, one that jumps out at me. So of course there's a small imbalance here as well, and so forth. You could say there's a very tiny one here, but I've just marked out the obvious ones, the ones close to price that will help frame a narrative for now. So cool. So we've got two major imbalances and then 2 points of liquidity marked out on our charts, right? And now we can come on to our weekly time frame. We can drop a time frame. Cool. Okay. So again, you can see how important this trend line liquidity is. Clearly, price is respecting it. So at one point, I do expect this to get taken. On top of that, we've got this monthly imbalance. Price hasn't traded into this at all. So, that's something to watch out for. And of course, we've got the liquidity down here. We've got the imbalance down here. What's interesting is that within this monthly imbalance, there's a couple weekly imbalances. So there's an imbalance, well, this itself is an imbalance. Of course, it's not all drawn on. Inside here, this gap, there's a small imbalance, and there are some smaller ones down here as well, around 13-14k. So now, essentially, in simple terms, all you really need to do is, repeat the process on this time frame on your weekly, at least for monthly and weekly. For me, most of the time it's pretty identical. So first thing I see is a small imbalance here, very small, but still worthwhile marking out. For when an imbalance is this small, I personally wouldn't mark out the midpoint. I'll just leave it there. Another important thing that I actually forgot to mention and do is that I will usually mark these up just so I can differentiate. Right, just makes it easier for me. And of course, to some people this might seem a bit messy or cluttered, but with your charts, well, you should keep them neat and clean, but it should be just something that works for you. This is just something I'm used to, so keep it as it is. I don't think this is even gonna come up. Okay, cool, but it's fine. I'll refine it a bit. Especially if you're finding the midpoints of your imbalances and so forth, you want to make sure that you've actually drawn it on properly. Zoom in a little, use the OHLC, so open, high, low, close, to actually get like a perfect drawing of your imbalances, order blocks, whatever. So yeah, so for me, another thing I would mark out, there was an order block here. And price, I'll make this a different color just so it's a bit easier to then differentiate. Again, one thing you guys should notice is that when I mark out stuff, the first thing that I've kind of picked apart are things that were close to current price, because those are the things that are going to matter first of all, right? It's, of course, I can show you guys there's a imbalance somewhere down here. You can mark it out, but it's not really necessary. You need to mark out the pivotal or important points around the current price. So cool. Now you have kind of like a framework to work with, right? You've got your imbalances above and below on your monthly charts, right? And you've got a bullish order block that price reacted from already. Price has reacted from this twice, and we've got trend and liquidity that's been formed, right? So, what could you hope for? This liquidity gets breached and we get another bounce, potentially. Or we trade through it. If we trade through this, what happens next? We have this liquidity to take, we have this imbalance to fill, right? I feel like a lot of people have a bit of an emotional attachment to Bitcoin. When you're doing analysis, especially technical analysis, it's the same as any other chart. You can ignore these numbers on the side. Just watch the candles and see what the candles are telling you, what the price action is telling you. But yeah, on the weekly, there's not much else that I would mark up. There was an order block here, so this candle was mitigated here. If you do this quite regularly, right? Another thing is your eyes just start to pick it up. You don't really need to draw up everything. You just kind of get used to just seeing it, and like your head will just know sometimes, or at least that's how it is for me. But cool. Now now we're down on a daily chart. You can repeat the process. With my daily chart, usually if I'm drawing something on, it gets removed quite quickly or quite often, because of course price will trade into it or through it. So at this point, you guys should know things that I'm marking out. Of course, we've got these major wicks here. I think we will trade to. Trying to spot anything else because I decided to make my chart naked, so I can come here and draw everything on as if I was doing it from scratch. But there's nothing major that stands out to me here. There's nothing I'd really personally mark out. You had like these order blocks here, they all got traded to the next point above is this fair value gap. There was liquidity here again, right? This liquidity needs to be taken, so I probably would draw this on. Cool. You can see price hasn't traded to this level yet. One liquidity pool, and this in itself is another. I guess you can just make it diagonal if it's easy for you guys. I'm not gonna add the dollar signs this time because usually this is how I leave it on my chart. This is how it actually is, right? So for price, I'd like to see trade below 36.9k to take out the liquidity here. Cool. That's the daily. Now the 4 hour, right? So the 4 hour here is interesting because one, shout out Omar first of all for showing me this, but we have something in play called a market maker sell model. This is our original consolidation, right? The market maker sell model has this sort of shape where you consolidate, you go up, then you come down, right? Of course, there's a lot more to it, but I'm just putting it in very simple terms. And the way the market maker sell model ends is by finishing below the original consolidation. So I want price to trade below. If I come here, it's about 37.5k, right? And at the moment, price hasn't done that, so I can see that happening next for Bitcoin potentially. I can see another drop deeper. We push below, we take this liquidity, we also take this liquidity, right? And if you come over here, so this is one of my favorite things to see on a chart. We have an imbalance here, right? So of course this was an imbalance that got filled. I take, but this is the imbalance, right? 4 hour imbalance. So price traded into it, but of course price traded into it, but not into the 50%. So for me, I'd be leaving this on my chart. So what I think, and of course you have to apply logic, you have to think logically, right? Price is already in a bearish state of delivery, so we're bearish. We are in a market maker sell model. There's a concept from ICT, if I didn't already mention. We expect price to close, below this. Okay, so we're taking out the liquidity. Then there's another liquidity pool here, and what's right below this liquidity pool? The 50% of this 4 hour imbalance, right? Or even the whole imbalance. Price could take it all. So this is my viewpoint. I think next price will push down. I do want to see price trade into this. If I just eyeball it, 50% sits around like here. Yeah, so that's about 36.7k ish, roughly. And yeah, for here, that's pretty much all I'd mark out. And again, the importance of me marking out this one in specific, what I've been telling you guys for this whole time, you want to mark out the points of interest that are next to price or close to current price, because that's going to be your drawn liquidity. That's going to be the next thing that matters. But it's important to start on your higher time frames to kind of build a narrative, understand what price is doing on a higher level, rather than just come down to your 15 minute. Because look, if I go to my 15 minute now, somebody might try to tell me that this is bullish potentially. Someone out there might. I don't think it is. But of course, because of that, it's easy to get sucked into these small time frames. I know, well, I used to do this when I was a beginner, but instantly just jump on small time frames, just instantly look at 5, 3 minute, whatever. That's not how you want to get into trading. You need your context. You want to know what price is doing on a bigger level. Then you want to drop down, to these lower levels, having that in the back of your head. Like, overall, we think price will trade lower. So if we're taking trades on our 15 minute, we're looking for sells. We want to sell from, well, I'm not about to give you guys a trade idea or anything, but essentially you'd want to be selling, let's say from up here or whatever, coming down, and sell into our target. Our target being down here, this 4 hour imbalance. And again, dropping another time frame, coming onto hourly, we've left a bit of an imbalance behind here, so you can mark this out. So if I were, I don't trade Bitcoin anymore. I don't do futures. I'm purely doing forex at the moment. But if I was, I'd be marking out stuff like this. This is going to be important to all your trades. This could even be an entry, depending on when I drop this. You pay attention to this. You can see this all get filled and price come lower. So yeah, that's about it from the technical analysis side. It's not everything I do, but it's a brief outlook or look into how I do my top-down analysis, especially for Bitcoin, and it's quite similar on pretty much everything else as well. So yeah, but let's get into the economic stuff. Okay, so I don't want to bore you guys too much with the economic stuff, right? But there's a FOMC meeting coming soon in America. It's the Federal Open Market Committee meeting. So essentially, in this meeting, usually they discuss the interest rates of the dollar, right? And I know some of this stuff won't make, essentially, if you don't study economics, if you don't know what these terms mean. So I'm going to leave the link to a very good playlist below. It's called The Hidden Secrets of Money. It should give you a very good, cool foundational understanding of how certain things work, especially in the American economic system and even the global economic system, right? And for some of you, it should be eye-opening in terms of your stance on Bitcoin as well. Essentially, they've been announcing a 50-point hike in interest rates. Currently, we're on a 25-point hike. So if we go to a 50-point hike and interest rates go up, this means that the value of the dollar will be increasing, right? When we trade Bitcoin against USD or Bitcoin against USDT, right? Essentially the same thing. No one comment on the technicalities, but what that means is that you're buying Bitcoin for USD, or essentially another way you could look at it, you're buying Bitcoin, you're selling USD. What that means for the current price of Bitcoin, right? If Bitcoin is traded against USD and the value of USD is rising, because Bitcoin is an asset, it will mean the price of Bitcoin will be worth less, meaning we expect a drop in price, right? On top of that, Bitcoin is considered a risk on asset. So what this means is a lot of investors, the major funds and whoever, if the value of the dollar is increasing, they want to be in risk off assets, things like gold, other metals, you know, commodities and stuff, rather than Bitcoin, which is still considered a risky asset. So in terms of what's next for Bitcoin, first I showed you guys the technical analysis side, right? I showed you I want to see lower levels because of blah blah blah, the market maker sell model, the liquidity pools, the imbalance. So now I'm also providing you with a kind of framework of the news. You see how it goes hand in hand. I'm telling you, they've been announcing a 50-point hike, 50-point hike for quite a while now. For the past couple of weeks, right? So if that's gonna go through, which evidently it probably is now, it would make sense that Bitcoin's gonna dip price, it's gonna take a bit of a dump. And where will that dump take us? It will take us to the objectives that price kind of needs to fulfill. We're going to be taking the liquidity and we're going to be filling those imbalances. Again, there's probably a lot more detail that I could go into, but I just wanted to keep the video fairly simple so everyone can understand and take it in. And make sure you watch the playlist that I attached below and check out my Instagram, check out my Twitter, join my free Telegram channel, and I've also got a podcast out, so everyone go listen to that. I'm going to see you guys soon in the next video. Here's all my socials.